Okay, good evening, class, and welcome to our taxation class today. This evening, we'll be looking at objection and appeal procedures. The last class, we looked at determination of residence, and we learned that residents play a vital role in determining which taxing authority will tax an individual. We looked at what is more important, if it is nationality or if it is residence. And we looked at the fact that residence takes the upper hand. It doesn't matter if you're a national, but it does matter if you are a resident. We looked at the meaning of residence, and we said a person is considered to be a resident individual if he fulfills any of these three categories. One, he is resident in Nigeria. Okay, that means he's domiciled in Nigeria. Anywhere in Nigeria that he is domiciled, then he is a resident of Nigeria. And that makes those Nigerians who are living in the diaspora to be non-resident. Those people who are living outside Nigeria, not domiciled in Nigeria, are not resident in Nigeria. We also look at another criteria that if that person sojourns or comes and goes in Nigeria, that means if he is staying in Nigeria for a period of 183 days and more, even though he comes and goes, then he is a resident person. He's a resident person. All right, then the third definition of a resident person is someone who works with the embassy or maybe a Nigerian diplomatic agent. Now, as a diplomatic agent, it means that you will not be living inside of Nigeria. It means that you will be living in the geographic territory of that country you are representing Nigeria. Please, I will ask everybody not to on their video. Please do not on your video. Now, if you are a diplomatic agent, a diplomatic resident person, okay, that means, okay, if you are a diplomatic agent of Nigeria representing some, living in another country, working for Nigeria, then you are a resident person in Nigeria. In that instance, we don't look at you that you are not living in Nigeria. That place where you are representing Nigeria is seen to be an extension of Nigerians' geographical region. We now saw that the place of residence is important, especially for people who have income ranging from employment income to trading or business income or income from investment income. We saw how the residence affects where these types of income earners will be taxed. We then look at what we call the principal place of residence. Now that means if somebody has more than one place of residence, then there is a principal place of residence. That principal place of residence is where he is deemed to be resident for taxation. And so we saw how that plays out. We saw a few examples of how we can resolve the residency issue. We said that the first circumstance that occur will usually take precedence. Okay, we looked at meaning of income. We said there are two broad kinds of income: the earned income, which comes from employment and from business. And we also saw the unearned income, which comes from investment. Okay. We also said that if somebody who is not a resident individual in Nigeria, but perhaps the person, yes, lives in Nigeria or perhaps sojourn in Nigeria, is earning employment income, that's fine. But the moment he starts trading in Nigeria, he becomes liable to tax. All right. So let's go now to the next topic for today. The next topic for today is objection and appeal procedures. Objection and appeal procedures. All right. Now, whenever you are in business, that you are earning in business income, this now we are going to use example of business income and not employment income and not investment income. In this class, we'll be looking at how business income will affect objection and appeal procedures. All right. The FRS, that's the example we are going to be using, because let's assume we are a limited liability company. The FRS, the taxing authority to limited liability company, will normally give you 30 days, 6 months after your account ending date for you to do certain things. Prepare your account, audit it, and then do a self-assessment of yourself for tax. Then within that 6 months, you are supposed to file your tax returns and then pay the appropriate tax. Now, the taxing authority is applying what they call the principle of loyalty. So the principle here is that they believe that you are going to be loyal. They believe that you are not going to assess yourself wrongly. You're not going to cheat government, and you're going to give the truth. Moreover, it will take a long time for the FRS to start going to all businesses to go and look at their books first and then assess them to tax. And so whenever you give your self-assessment, the only thing that the FRS does is they will look at it and they will check for errors. They will also check if the tax laws have been followed to see if there is any computational error and if there's any error in principle. Then they will also check if really you have given them the true position of your tax. Because some people in the same industry may be doing the same kind of business, having the same kind of turnover, and they are paying more tax, and you are declaring less tax. So they want to see if really you are giving them the true picture if you are not understating your revenue and overstating your allowable expenses. And then when they look at your record and they look at your self-assessment, they may decide to okay it. And when they okay it, it means you are good to go. And because you filed for tax, you've also paid the tax, and you have attached the tax receipts to your filing, you are good to go. They've just cleared you, and you can proceed to apply for tax certificate, tax clearance certificate, which shows that you have paid your tax and you are not owing. Now notice here that you were the one who did the self-assessment of yourself. Secondly, the tax authority did what they call a desk audit. So they audit your tax account as it gave to them on the desk. So they look at the account and they can okay it and say, this person is good to go. And they give you a clean bill of health. What if you submit your tax file, your assessment, and they look at it and they say, here is some irregularities. Well, this is not a true picture, or perhaps there is a computational error, or perhaps you have made, you have added some non-allowable expenses to your allowable expenses, or there are some allowable expenses that you cannot justify. And so the tax authority does not okay your self-assessment. And so the tax authority now gives you an assessment different from the assessment that you have just filed in. And so let's say, for example, you filed for 500,000 naira as your tax, and the tax authority look at your account and say, wow, your tax is going to be 900,000. Now that's an additional 400,000 naira tax. Of course, you will be aggrieved. Nobody wants to pay more tax. The general consensus of taxpayer is to pay the minimum tax. Why? Because it is a compulsory levy. You are not getting any direct benefit by paying this tax. Moreover, we feel that the government are just using our money. Yes, they may provide one or two things, but we generally think that we are just providing for them to eat. Okay? That is what some people view. And so, if not that the government is using force to force us to pay tax, people will generally not pay tax. And so we are opposed to paying more tax. We want to make sure that we reduce our tax to the barest minimum. And anything that will make us pay more tax, we will oppose it. And so when the government gives you an additional tax to pay, we will want to kick against it. We want to oppose, and we want to raise objection. Okay, now when the additional tax is issued to you, the government will write on the assessment notice that you have 60 days to pay off this tax. Okay, some will even say you have 30 days. to pay this tax. Now, within that 30 days they have been giving you, normally, if you are aggrieved and if you are not in support of that tax, what should you do? Well, some people who do not know their rights or the law will just go ahead and pay the tax. Some people, they will cry to the tax authority, who will tell them that, look, there's nothing we can do, just pay the tax. Now, what should you do? Within that 30 days, you have the right to object to the tax that is being given to you. You have a right to say, no, I won't pay this tax. Now, that is what we call objection. You're objecting that this tax is too bogus, this tax is too much for you, and it's not justified. But how do you raise an objection? Well, it's not just by going to court and say, objection, my lord. No, there are things you should do to make your objection a valid one. Your objection must be in writing. So it's not enough for you to call the tax authority or just visit their office, just storm their office and say, how can you give me this tax? It doesn't end that way. There must be a correspondence, a document showing that you have objected to the tax position given to you. If it is not in writing, it is invalid. Secondly, it must beat the deadline. You have 30 days of the date that is on the assessment notice to file an objection. If you don't file with an objection within that 30 days, it means that you accept that additional assessment. And when that 30 days elapse, you will have to pay the tax. And you have to pay the tax within the next 30 days. That's making 60 days. Okay? So within that first 30 days, you must have written your notice of objection. So notice here that it is a notice of objection. You are notifying the tax authority that you are aggrieved by their decision to increase your tax, and you have taken steps to right. Now, what is the third thing? You must state your grounds of objection. Now, it is not enough just to write within 30 days and you just tell them that this tax is too much. No, you must tell them the reason why you are objecting to that additional assessment. Perhaps it is not based on the self-assessment. It is maybe based on imaginary figures. Maybe perhaps it was based on best of judgment assessment, which is not supposed to be so, because you have given them the true position of your tax and they have set that aside to do something else. Perhaps they are comparing your company with another industry in the same field, and because the person pays certain amount of money like that, and they expect you to pay, whereby you have not made that kind of revenue the person has made. So you must state all the grounds of objection. You must state them in writing, okay? Then you have to address this letter to the chairman of the Federal Inland Revenue. Now, as you are doing that, you need to add certain things in your notice of objection. You need to state your total profit. Now, what is total profit? Your total profit is your profit that is adjusted for tax. Okay, so we have what they call net profit. Of course, that should be stated. You have your net profit, which is from your financial statement, which got audited. Then you have to convert your net profit to assessable profit. What is assessable profit? Assessable profit is a net profit that has been adjusted. How is it going to be adjusted? It means that all the non-allowable expenses that is allowed by FRS that makes up your net profit should not be in the assessable profit. It means those non-allowable expense that you have deducted before will be added back to your net profit to increase your net profit. Also, there are some income stated in your comprehensive income, which is not supposed to be taxed by the Federal Inland Revenue as your income tax. For example, the income from disposal of fixed assets. It's not supposed to form part of your company income tax. So you have included that income as part of your income, but in your assessable profit, you are going to deduct that income because it has overshooted your income. And so you see, you are going to remove non-taxable income from your net profit, and you are going to add back non-allowable expenses which you have reduced, which you have deducted. And when you've done that, that becomes your assessable profit. There's a need for you to also convert assessable profit to total profit, which we call chargeable profit. How do you do that? You deduct capital allowances from your assessable profit to get your total profit. So basically, you show your net profit from your accounting statement. You show your assessable profit. That's how you've adjusted it to assessable profit. You will show your capital allowance, and then you will show your total profit to show that this is the profit that should be taxed. That's the total profit for the relevant year. Then you are going to also show your tax computation, the amount of tax you have calculated that you are liable to pay. You're also going to calculate the withholding tax that you have claims against your tax liability, which is reducing your tax liability. So all of these should be attached to your notice of objection. But your notice of objection is going to just state the grounds for objecting. It's going to be filed or sent within 30 days, and is going to be in writing with all these other attachments. And not to forget, you have already given them your statement of account or statement of affairs, as the case may be, your financial statement, giving it to them already. That is when you're filing for tax, you already sent them. So this notice of objection is telling them that you are not going to pay the additional tax. Now, what will the FIRS do when they receive your notice of objection? Okay, when they receive your notice of objection, they are going to look at the additional assessment that they have given you again. Okay, they will look at everything in line with what you have just said. If you make a valid point and they find out that, oh, we've done that in error, they are going to amend the assessment and serve you a revised notice of assessment. Now, it means that you've, you've paid 500,000 and they said, no, your tax is 900,000. And they're asking you to pay 400 additional. And they now discover that, no, we are not supposed to have given you additional assessment. They will write you back telling you that your revised assessment is 500, and they will acknowledge what you paid. Now, when they do that, it means you have resolved the matter amicably. It means the problem has been mutually solved. No problem. It's just like you shake hands and make up. If you have not paid the tax, it means you have been okay to go and pay the 500 in which you have said is your tax. But what if they look at it and they maintain their ground and they say, no way, we will not reduce the tax assessment. We stand on our ground. You can pay, you can go take us to any length to prove your case. We stand our ground. All right? They now give you what they call a refusal to amend notice of assessment, notice of objection. Okay, so it's a refusal of notice of objection. So what will that notice of, what is that refusal going to contain? The refusal is going to contain one, it is going to contain the assessment of tax that you have been given before. It will contain the fact that they have failed to agree with your notice of objection, which has been filed, and they have acknowledged. And they will not tell you what you can do if you want to take further step. Okay, you'll be given another 60 days to, pay this revised notice. Take note that they gave you 60 days the first time and you object. Whenever you object, it's like pressing a stop or pause on the timeline of paying the tax. Once you have objected, you have also kind of pressed a reset button. You have pressed a reset button, so it will start counting from 0. Now the new count starts when they give you a refusal to notice of objection, refusal to amend the tax. So they reset the button again. You start counting another 30 days. After that 30 days, if you don't do anything further, it means you agree with the tax. So what do you do? All right. There is no point going to the tax authority anymore because you've taken that step. You've taken that step. Perhaps you've met them in person. They said, no, you've written, and they are telling you we cannot amend. So you can't keep going to the same person that is telling you you can't amend, telling them that the same reason you've gave them, that is what you've come to tell them again. They will just tell you no. So what do? Do you just pay the tax? If you feel you have a good case, you can pay the tax. You can take it further. But if you feel that you don't have a good case, then you have nothing else than to pay the tax. This is because if you take it further, you will be subjected to kind of audit. And if they reveal in the audit that you have things to hide, people today, they want to reduce their tax by all means. And so some people will reduce their revenue by 40%. And what they are seeing here is they are presenting to you a 60% revenue. And their expenses is going to be like 100% of the expenses. If not more, some will even inflate the expenses. And these are criminal offenses. And if you know you have a skeleton to hide, then there will be no need for you to proceed further because you'll be subjected to tax audits to verify your claim. But if you can beat your chest and say, I have nothing to hide, I'll go ahead and take it to the next level. What do you need to do? You take it to the next level called approaching the Tax Appeal Tribunal, TAT. So I'll be talking about the TAT, the Tax Appeal Tribunal. The Tax Appeal Tribunal is set up pursuant to Section 59, subsection 1 of the TAT Act. And now they are set up to exercise jurisdiction and powers to, arbitrate between the government and aggrieved individuals for the purpose of taxation. And so there are certain taxes that the individuals and companies will go into, disagreement with the government. And when there is disagreement, instead of going to the courts as the first option, because the courts, it take a longer process. Meanwhile, the Tax Appeal Tribunal will take a very shorter process. It's an administrative thing, not a court. It's just for administrative convenience, for government to resolve tax issues speedily. They set up the Tax Appeal Tribunal. Okay, now the Tax Appeal Tribunal has jurisdiction over certain tax legislation or certain tax acts. For example, they can arbitrate to settle disputes relating to personal income tax. In personal income tax, a business name or a partnership business or a professional may be having a tax dispute, which is under personal income tax, and they may resolve it. We also have payee under Personal Income Tax Act to be resolved. We also have the Companies Income Tax Act. And so this is where limited liability companies and public liability companies, the PLC, they have tax disagreements. The Tax Appeal Tribunal has jurisdiction to look into the company income tax and to say, okay, this is the appropriate CIT to pay, this is the appropriate education tax to pay. They also have authority to look at petroleum profit tax. Petroleum profit tax is the tax that petroleum companies or individuals engaged in the petroleum upstream business is subjected to. Yes, they are not subjected to company income tax. They are subjected to petroleum profit tax. And so if they have any issues, they resolve it. There's another one, the value added tax, which is VAT. Okay, that one is gaining more grants now with the Tax Appeal Tribunal because many people used to run away from paying VAT. And so when the government finds out, the government could even take you to a Tax Appeal Tribunal to force you to pay your VAT. So VAT Act is also being looked at by the Tax Appeal Tribunal. We also have the Capital Gains Tax Act. The capital gains tax is the tax that has to do with disposing of your fixed assets that are referred to as chargeable assets. Let's say, for example, your land and building is an asset, a chargeable asset. And so you dispose of that land, you are supposed to pay what they call capital gains tax if you don't buy another land to replace it. And that's for business purpose anyway, not for private purpose. So if you don't do what they call a rollover and defer your capital gains tax, you are liable to pay capital gains tax. And if you have issues on capital gains tax, the tax appeal tribunal will help us resolve it. Then we have the rave of the moment, the Stamp Duty Act. Stamp duty is the #1 tax reigning at the moment, and you can bet that people will have issues with this stamp duty. Some people do not know what constitutes their stamp duty. Some people are being excessively charged and all that. And so the tax appeal tribunal will arbitrate in the stamp duty rivalry between the government and the individuals. All right, now we've seen the composition, the jurisdiction where the tax appeal tribunal exercise their power. Now let us look at the composition of the tax appeal tribunal. Now, the people who makes up the tax appeal tribunal are called tax appeal commissioners. So the tribunal is just an umbrella. The people under the umbrella are called commissioners. Okay? Now, in each appeal tribunal, the tax appeal tribunal, they are in zones. They are in zones. Okay? Now, there are 8 zones. 8 zones making up the tax at 8 zones. In these 8 zones, 6 of them are in the 6 geopolitical zone, while 2 of them are stand-alone. So let me start with the stand-alone. The first one is in Abuja, which is the headquarters, which is where the Secretary General, the General Secretary, is handling affairs. Okay, so the Abuja is a standalone, and it covers the FCT and any other foreign or non-resident individuals who will have tax issues with the government. So the FCT, the Abuja Tax Appeal Tribunal, the zone there takes care of that. Of course, there's another stand-alone, which is the Lagos zone. The Lagos zone is like the Abuja, a standalone, also having jurisdiction to handle tax disputes. Citizens of Lagos State. It only covers Lagos zone. Then the other 6 covers the 6 geopolitical zones. So there is one in Bauchi that covers the northeast zone. There is one in Kaduna that covers the northwest zone. There is one in Jos that covers the north central. There is one at Ibadan that covers the southwest zone. There is one at Enugu that covers the southeast zone. And there is one in Benin that covers the south-south zone. So you see, we have 6 zones, 6 zonal tribunal, plus the 2 standalone, which is 8 zones making up the tax appeal tribunal. And if you have any issues, you usually go to the zone covering your area. Now, in each zone, there are 5 members or 5 tax appeal commissioners. So 5 in Abuja, 5 in Lagos, and 5 in the other 6 zones, making it altogether 40 tax appeal tribunal. 40 tax appeal tribunal. These 40 people are appointed by the president, either by name or by office. And they hold a term lasting 3 years, which can be renewed once. So in 6 years, you can have these 40 people doing a 2-term. Now, in each zone, there is a chairman, and that chairman has to be a legal practitioner. Now, there is a reason why the legal practitioner is preferred to be the chairman. This is because the judgment of the tax appeal tribunal is seen to be coming from the courts, from the high courts. And so if he has a legal practitioner experience, he will be giving judgment as though it is coming from the court, even though the tax appeal tribunal is not a court. And so he must have 15 years experience or more relating to tax legislation and matters. And so it means that he must have been serving in practice as not only a lawyer or a magistrate or perhaps a judge or retired, but he must also have 15 years practice as a tax person. It means that he must have a tax practice license. At least that will give him an edge in experience in tax. So you see, all this 15 years experience will make the chairman to be well abreast with the tax laws so that he can give a judgment that will seem to be flawless. Now, other people who are members of the tax appeal commissioners may not need to be legal practitioners or do not need to have 15 years experience, but at least they should have experience in tax practice. Okay? The chairman will preside at every sitting. The chairman will preside at each sitting. And in his absence, any member shall be appointed to preside at the tax appeal tribunal. So if there are 5 people, okay, it means that if any situation needs to be voted for and against, the chairman's votes will cut the tie. When there are about 4 votes, 2 in favor, 2 against, the chairman's vote will cut the tie. Okay. A quorum is the minimum number of people that you must have before a sitting can hold. And the quorum is 3 members. So if you call for a tax appeal tribunal to sit on your matter, and there are only 2 people there, the matter cannot hold until a third person comes and joins them. So that's it. What are the qualifications of people who are appointed as tax appeal commissioners? The person must not be, will not qualify as tax appeal commissioner, TAC, until he knows or is knowledgeable about tax laws and practices in Nigeria. Okay, we've talked about the terms of office, 3 years, renewable for another 3 years, and he can stay in that office until he is 70 years. So it means that if you are appointed as a tax appeal commissioner, perhaps either as a chairman or as a secretary, maybe at the age of 68, or perhaps let's say 65 years, you serve for 3 years, by that time you are 68, and you are renewed to serve for another 3 years. Now, by the time you are going to serve the second year of your renewal, you would have clocked 70. So you will no longer continue to serve in the third year. You have to be replaced, because that is when your office ends as a tax appeal commissioner, 70 years, or whenever your tenure expires. Now, you may resign at any time, giving in writing that you have resigned. But you could be removed before your tenure ends based on the grounds of gross misconduct, or you are incapable of handling that office after an inquiry has been made and you have been given an opportunity to be heard, and it is found out that you are not capable of handling that office. Okay, then you also they have to be paid. We've seen the jurisdiction of the tribunal. We've seen that Company Income Tax Act, Personal Income Tax, Petroleum Profit Tax, Capital Gains, Value Added Tax, there is stamp duty. Okay, so what are some of the powers of these people who are the tax appeal tribunal? Okay, they may have the powers to make rules that regulate the practice of taxation. They shall have the purpose of summoning anybody and examining him on oath to tell the truth. They can have the power to require you to produce documents that relates to a taxpayer. So you come to the tax appeal tribunal, they can ask you to produce documents, to produce statement of accounts, supporting documents, and anything they ask of you, they have the power to ask you to bring. They have the power of receiving your evidence on affidavit. They can call for witnesses and examine the documents. They can review any of his decision. So they can take a decision now, they can review it. Now they can dismiss an application for default and decide matter ex parte. So they can just emergency decide a matter. Okay, they can set aside the tax assessment that the Federal Inland Revenue would have given to you, the additional one. They can set aside it. They could even uphold it. So the tax appeal tribunal, in its judgment, can uphold the government, the tax authority, by saying, yes, your tax is good. They can reduce your tax or they can even cancel it. And you see the judgment is seen as coming from the courts. Okay? Now, when you are coming before the tax appeal tribunal, who has the onus of proof? The onus of proof lies on the appellant, the person who makes the complaint to the tax appeal tribunal. It means that the person has the appellant has the onus of proving that the tax given to him is too high or that the tax is not appropriate. Okay, so it's either the taxpayer or the tax authority. Whoever is appealing to the tax appeal tribunal becomes the appellant. You know, most times the taxpayer is the appellant because the tax authority has other powers to force the taxpayer to pay tax without necessarily going to the tax appeal tribunal. But the taxpayer is at the mercy of the tax authority. And so they are the major people that go to the tax appeal tribunal to have them arbitrate for them. And so they have the burden of proof to show that they have assessed themselves correctly to tax and that the additional assessment should be set aside. Now, if the representative of the FR of the taxpayer or even the taxpayer himself that appears before the tax appeal tribunal, I forgot to tell you, the tax appeal tribunal, as we said, is not a court, and so you don't need anybody to represent you as a lawyer. You can represent yourself. If you can do that. If you cannot represent yourself, somebody in your office could represent you. Could it be your financial controller, your tax consultant could even represent you? It could also be a chartered accountant or a lawyer. Okay? So if you or your representative fail to show that your position is correct, that you have duly followed the tax law, and that there is no reason why they should unnecessarily increase your tax liability, then you must have lost. Then the tax appeal tribunal will rule against you. Okay? Now, the tax appeal tribunal will ask you certain questions. And if you fail to answer the question, you're also weakening your position. So you fail to answer the question, it means you have not satisfied the tax authority, the tax appeal tribunal, why they should rule in your favor. If they ask you to bring certain documents and you did not bring the documents, it means you have not satisfied the tax authority or the tax appeal tribunal. So the tax appeal tribunal will have to be satisfied whenever a case is brought before them. Now, how do you go about approaching the tax appeal tribunal? Now, you've just received a refusal to amend notice of objection. You just received that refusal from the FRS or from any of the taxing authorities. I'm using FRS as an example. Okay. Now, having received that, you have 30 days to write to the tax appeal tribunal that you want them to arbitrate over this matter. Now, like you did in the notice of objection, you have to state your concerns, your appeal. This time is an appeal. You have to state your appeal in writing. That's one. Secondly, you have to do it within 30 days. Thirdly, you will have paid the tax that is not in contention. So that means if you say your tax is 500 and they say your tax is 900, you must have paid the 500 that is not in dispute. Then you must have to state your grounds for appeal. Now, your grounds for appeal will be the same thing you stated as your grounds for objection. So your grounds for appeal will be the same as your grounds for objection. Then what will you do? All the things you've attached, all the things you've sent to the FRS, you're going to send them again to the Tax Appeal Tribunal. So that means you're going to send your detailed statement, you're going to send your tax computation, your capital allowance computation, your assessable profit, your taxable profit, everything to be sent to the Tax Appeal Tribunal. Now, when they see all that, they will now write a notice inviting the defendant and the plaintiff, which we will call the appellant, to come for a public hearing. So all the Tax Appeal Tribunal are heard in public, just as in a court setting is heard in public. So the Tax Appeal Tribunal must be heard in public. It is possible that members of the Tax Appeal Tribunal, that is the Tax Appeal Commissioner, let's say, for example, you are in Lagos State and you have a tax dispute and they bring a Tax Appeal Commissioner. And let's say, for example, my humble self is a member of the Tax Appeal Commissioner. I must disclose certain things for me to continue sitting in that Tax Appeal Tribunal. One, I must disclose if I have a personal relationship with the aggrieved person or with the defendant. If I have any personal relationship or any personal interest, I might choose to abstain from the hearing. After all, there are 5 commissioners and we just need only 3. I could step down. Perhaps I was supposed to be the chairman, but since maybe the person who is bringing the case, maybe my student, my former student, I have a personal relationship with him. Or perhaps I have a business relationship. Perhaps maybe maybe my brother or sister or my spouse is a major shareholder in that company, or a customer or a supplier. We have one related party transaction. I may need to disclose all of that and step down from the hearing. Okay, so that will enable you to be free from bias, to be objective when you are handling the tax appeal. When it is time for you to handle the tax disputes, so you are free from bias, you are objective. Okay, so you must reveal your relationship. All right, now the Tax Appeal Tribunal has been constituted. They are now ready to hear you. So you who is the aggrieved person, you will be asked to speak. You will speak first, you state your grievance, you state your annoyance, and they will ask you certain questions as if it's a court, and you will address them, my lord, as if you were in a court, but this is not a court. So you observe all the decorum of a court system while in the tax appeal tribunal. You may even be asked to sit down when stating your case, or you may even asked to stand. Okay, so now the tax appeal tribunal have heard you. They have heard also the defendant, and they look at it. The defendant has no case, or the defendant cannot prove without beyond reasonable doubt. Or they have looked at the appellant. The appellant has proved beyond reasonable doubt that the appeal, the tax leveled against him or her is excessive. And so they can rule in your favor. When they rule in your favor, that ruling is seen as coming from the courts. And so what you do for you to really exercise that ruling, for you to really take advantage or enforce, that's the language, for you to enforce that ruling, you will take it to the court within 30 days of that ruling and register it with the court. And you will get an enforcement. Sometimes when you get that enforcement, you place it in your office, the tax authority will not harass you. Okay? But what if you are dissatisfied with the outcome of the tax appeal tribunal? Let's say, for example, you did not prove beyond reasonable doubt and the tax appeal tribunal rule against you in favor of the FRS. Now, the FRS will go and get this enforcement within 30 days, and they will come and enforce. They will come and enforce that ruling on your office. Now, while they are getting that enforcement to come and ask you to pay your tax that has been ruled. Now, that tax that the that the tax appeal tribunal recommends or ruled is called the judgment tax. So the FRS will be going to the High Court to get a ruling, an enforcement of the judgment tax. What should you be doing if you think that the tax appeal tribunal err in its judgment? They perhaps made a mistake and you think you can explore that mistake or that error. You have within 30 days to appeal before the Federal High Court. You have within 30 days to appeal. Now, this time around, you are going to a proper court, not going to a tax appeal tribunal. Now, you are not only now bringing the FRS to distribute or to the court, you are also bringing the tax appeal tribunal for judgment. And so what happens is that you have to state it in writing. For it to be valid, it must be stated in writing. It must be within 30 days of the date of the judgment of the tax appeal tribunal. And it must be on points of law. It must be on points of law. Now, when we say points of law, it goes beyond tax matters. It must be on points of law. So you have to look at the legal implication. Which law has been contravened? Which law was not properly interpreted? Which law has not been followed? It must be on points of law. Now, as a taxpayer, as a taxpayer who may not know the law, you may not know the law well, you will need a lawyer in this instance. So a lawyer in this instance need to look at the case again and see if you have a good case to appeal on points of law. Now, can you see why the chairman of the tax appeal tribunal must be a legal personnel, a legal practitioner with over 15 years of tax practice? Because his judgment is seen as coming from the courts. He must not be found wanting on points of law. And I look at it now, tax law is also a law. And so he should have good experience in tax and law so that his judgment will seem to be flawless. Normally, when the tax appeal tribunal rules, it should be taken as a judgment that should not be pursued further. And because of the administrative convenience, tax appeal tribunal should be gaining more ground. Now, can you also see why it may not be good for a taxpayer to represent himself, but to seek the service of a professional, a lawyer, or perhaps an accountant? Because they will understand if you have a good case to appeal on points of law. Now, you have a good case, so to speak, and you go to the Federal High Court. You go to the Federal High Court to appeal within 30 days. So it means that while the FRS is busy getting an enforcement, to enforce it to pay at the expiration of 30 days, you are getting your appeal to be looked, for your matter to be looked into by a proper court, the Federal High Court. Now you succeeded in going to the Federal High Court. This time around, you would need a lawyer to represent you. So your case will be looked at, and if the court is satisfied that you have a good case and that you have satisfied your favor, when they rule in your favor, that means the FRS would have lost. You will now go and get a court judgment to enforce the judgment. Okay, now in the case that you lost, the FRS would have won, and they will go and get a court judgment enforcing the judgment. They have 30 days from the date of the final judgment for you to appeal. Otherwise, if you don't appeal within that 30 days, then you've lost. Who do you appeal to when you lose a case from the Federal High Court? You appeal to the Court of Appeal. And this time, you still need a lawyer to represent you. You go to the Court of Appeal, and the same thing happens. You lost. You have one more appeal to make to the Supreme Court. And if you lost in the Supreme Court, you've lost finally. Now, do you know what happens? Once you lost in the Supreme Court, you have only 30 days within which to pay that amount. And when you lose at the Supreme Court, that tax, that judgment tax, is seen to be final and conclusive. That's the language. Final and conclusive, meaning that no more appeal will be made. So the judgment is final, and conclusive means it has concluded. It means you pay the tax. Now, there are situations in which a tax could be seen as final and conclusive. We just mentioned one, when the Supreme Court rules and give its judgment. The next one is when the Court of Appeal rules and give its judgment, and you fail to appeal within 30 days. It means you have said the Court of Appeal's judgment of the tax is final and conclusive. Another situation is if you fail to appeal within 30 days after the High Court has ruled. It means the judgment of the High Court with regards to your tax is final and conclusive. Another one is when the tax appeal tribunal rules and you fail to appeal within 30 days. You are saying that the judgment tax is final and conclusive from the 31st day. Another situation exists when you fail to take the window of appeal to the tax appeal tribunal. The FROS give you a refusal to amend tax and you fail to appeal within 30 days. It means you have said that the tax given to you by the FROS is final and conclusive. So you can see all those situations that a tax is seen to be final and conclusive. Also, the last one is if you fail to object to a notice of objection within 30 days, you are also saying that the tax is final and conclusive. The question could be, in what situations is a tax not seen to be final and conclusive? I told you situations in which they are final and conclusive. What if they change it and say, how do you identify a situation when the tax is not seen as final and conclusive? You will simply say, when the time for objecting has not elapsed, then the tax is not final and conclusive. Even when you appeal to the tax appeal tribunal or to the Federal High Courts or to the Supreme Court, and the case is still yet to be heard, or judgment has not been given, then the tax is not seen as final and conclusive. Even after a judgment has been given and the window for appealing to a higher authority has not elapsed, the tax is not seen as final and conclusive. So we've seen, as a form of review, we've seen the procedures that we can take to raise an objection to tax assessment. We said normally you are doing a self-assessment review, but there may be additional assessments that may come to you. And because as a taxpayer, you don't like to pay more tax and you've done your due diligence, but nothing seems to work, you can raise an objection. So the first thing to do is raise objection. When the objection is not attended to or maybe is refused, then that is when you can start an appeal. Who do you appeal to first? You appeal to the tax appeal tribunal. We've told you the taxes that they can sit on and adjudicate. We've told you about the composition, that there are 5 tax appeal commissioners in each zone, and there are 8 zones, making 40 tax appeal commissioners rather. We've told you their office term is for 3 years, giving you the qualification of the chairman. 15 years cognate experience in tax matters, must be a legal practitioner. Tax appeal commissioners must be also appointed in office or by name. They would have proven that they are in a civil service, and if they are in business, they would have proved themselves that they are able to manage their own business. They are good tax payers, they are law-abiding citizens, and they must not have approached the age of 70. And they are well knowledgeable in the field of tax. We've seen the number of people that can sit in a case. The minimum number is 3. All 5 can sit anyway, but the minimum is 3. We've seen why the chairman must be a member, a tax practitioner. Then we've seen how you can make your appeal to the tax appeal tribunal. You who brings your case, you must have the proof that the onus of proof or the burden of proof lies in your hand. So how will you prove your case? By answering all questions, by producing all documents, and by telling the truth. If you win, you can enforce the judgment. And enforce the judgment as coming from the courts. But if you lose, you have appeal options available to you. You can take your appeal to the Federal High Court, move it to the Court of Appeal, and then to the last court of resort, the Supreme Court. Now, we've seen situations in which a tax is seen to be final and conclusive. We have also looked at when the tax is not seen to be final and conclusive. I also mentioned that your valid objection must be in writing, must state the grounds for objection, and must be sent within 30 days. Your appeal should also be sent within 30 days. It must also be in writing and should state the grounds of appeal, which should also be the grounds for objection. Now, if you are going to the courts, you also need to include in your grounds for appeal to the courts points of law in which you are basing your appeal. We also said that in the tax appeal tribunal, you can represent yourself, others will represent you. But when it goes to the courts, you need a lawyer to represent you. All tax appeal tribunal is heard in public. So these are some of the things we've learned today. And it goes so well with what we learned the last time, determination of residence, and how you are going to appeal when you have an issue with the relevant tax authority. What we've learned today using the example of FRS and a company can also apply with the state internal revenue and an individual. That's why we also have personal income tax there, value added tax, and others. So it could happen between an individual and the relative tax authority. And we have zones that can handle all that. It could also be that the FRS or the state internal revenue could be the one that is aggrieved, and they will take the taxpayer to the tax appeal tribunal. Sometimes it is rare, but it could be that some high connected individuals whom you cannot just easily enforce, except you go to you want to appeal to them, or you want to go through the tax appeal tribunal to make them to pay tax. So the tax authority would be the ones going to the tax appeal tribunal to seek adjudication, especially if they don't have certain powers or they cannot exert their powers on these individuals. Okay, so far so good. We've seen this topic. I would like you to go through your notes again. If you have any question, feel free to ask in the WhatsApp class, and I'll be glad to answer them. Now, I want you to also do something for me. You know, prior to this time now, tax is in skills level. It's just in November 2019 diet that they brought tax to foundation level, and they are still going to bring it back again to skills. So the only past question in foundation level you will see tax is November 2019 and March, July 2020. Do not rely on just these two past questions. Go to skills level and go and download the Pathfinder and look at the tax area. Of course, after you pass, you will still get to skills. So it is a good thing now to still download skills Pathfinder and be looking at the tax area. So that way, you will have more questions to practice with. At this time now, I would like to end the class. I'd like to end the class now. If you have any question, feel free to ask me in the chat room. So thank you so much for coming to class. See you in our next class, which is going to be on Tuesday. Send the notes in advance so that you read and prepare for the class. Thank you once again, and have a nice day.